when one candle engulfs that much price action, it is a major negative for the market. And at least for January, I want to look and use the January effect. And the January effect is looking to buy beaten down names. I have some levels and names that I'm going to show you here in just a minute. Then we still hold. If we break above 100K, then honestly, you could go back to 108, and even the bigger trend line is at 112.
Is the market setting up for a shocking reversal as we approach the new year? Gareth Soloway shares critical insights into the S&P's volatile patterns, Bitcoin's potential next big move, and why January 2025 could be a game changer for certain stocks. From hidden bearish signals to tax-related trading strategies, stay tuned for a deep dive into what savvy investors should prepare for.
All right, we're going to get right into it here. No wasting time. We have the S&P this morning is trading lower today again. Now, what's fascinating about this, yesterday when I did the game plan, we were trading lower. But what did I say to you? I said, listen, once we get into the trading day, the volume and the retail investor could be ready to float the market up. Remember, during these holiday weeks, the institutions are basically on vacation. They might participate maybe 10%. Ultimately, the rest of it is retail investors. So yesterday, for instance, we opened lower and floated up a majority of the day, right? Again, you can see right here, neutral to upside on the intraday chart of the S&P, and then some chop into the end of the day. Today, we're down again. Don't be overly surprised if we end flattish to positive on the day. If anything, it would be somewhat abnormal to see a little bit of weakness today. And when I say that, I mean like more than just a 0.1% drop in the markets. That would be more of a neutral day. But anything bigger, like a 0.25% to a 0.5%, that would be pretty shocking. Now, again, markets are weaker today. There's some issues going on with Germany. They have snap elections being called, so there's turmoil there. We have stuff in the Middle East still going on. We have stuff all around the world that is kind of creating this fear, but again, it's not being shared by the retail investor, which is why I think this is why we're seeing overnight futures going lower, because the rest of the world's like, oh, we got to sell. This is a little bit scary what's going on here and here and here. But then by the time the US markets open, the retail investors like, man, we don't care about that. Let's just put more money into the markets because the market can't lose. And I'm always cautious about that. When I start hearing people think, oh, the markets can't lose, when I see numbers like the most bullish in history on the markets for 2025, especially after we are up 26% or so this year on the S&P 500, those are the types of times where I start to get more conservative and start being more careful. All right, so that's what we have right in the charts here in the pre-market with the S&P down. To go over the technicals of the S&P here, very, very simple. We have this trend line up here. We have this trend line here. This is the one I'm paying attention to right now. We connect these lows going back to the August low right here, and we can see that we broke the wide range candle. That's a big deal. That was a big wide range reversal candle engulfing all of this over here, right? So again, when one candle engulfs that much price action, it is a major negative for the market. Now, since then, as we can see, we floated back up, but look at what we've come into, this arrow pointing to it right back to that trend line. So here it was support and support, right? So support, it bounced, right? Boom. Here it kind of kissed, bounced. Here it actually hit, bounced. Here it kissed and bounced. Here we broke. Remember, support, once it's broken, becomes resistance to the upside. And so you have this, and then this is resistance. Now, for me as a technician, I say, okay, now normally that's a great level of resistance. You would short into that. If this was normal price action with institutional involvement, you would short that probably, every time. However, you just have to be a little cautious this week and next week because of the holiday action. If we're still below this when January comes, and I don't mean next Thursday and Friday when it's January 2nd and 3rd, because I do think after New Year's it still could be light because of the weekend's coming right up. But once we get into the next week, if we're still below this, that would be epic. And I think we get another big dump on resumption of institutional action in the markets. All right. The other thing to keep in mind is I do think some of these high flyers that have run significantly into the year or year end here, whether it's Palantir, other things, I think what's going on here is they're staying up because no one that has a big gain in them, and we're talking 200, 300% gains on some of these names, even more, there's no one that wants to sell those into year end because they don't want to take the tax complication, right? They don't want to have to pay taxes on that gain. So I think there's probably a pent up amount of sellers that come January, and that could even be next Thursday or Friday, they end up selling then and say, hey, listen, I think it's overdone. It's way high. I want to sell now because it's 2025. I won't have to worry about taxes on this money for another year. And I think there is some pent-up selling there on some of these high flyers like a Palantir. So one of the things I wanted to talk about today was about basically how do we position ourselves, or how do I position myself going into 2025. And at least for January, I want to look and use the January effect. And the January effect is looking to buy beaten down names. I have some levels and names that I'm going to show you here in just a minute. Those I'm going to be buying because tax loss selling is pushing them down into year end and keeping them under pressure. But once we get to the new year, that's gone, right? You can't sell for tax losses of 2024 once we're in 2025. On the other side, I think we look to short some of these high flyers like a Palantir, and that gives us a great opportunity to kind of hedge with longs and shorts, but also make money in both directions. All right.
Gareth highlights how retail investors are driving the S&P during the holiday period, with institutional participation at just 10%. He notes that while global turmoil and bearish sentiment affect futures, retail traders seem undeterred, creating short-term upward pressure. He also points out critical technical levels on the S&P, including a broken support line that's now acting as resistance, and warns that institutional activity resuming in January could lead to significant downside risk. Additionally, Gareth discusses tax-related behavior, keeping high-flying stocks afloat, forecasting potential January selling pressure. Stick around as Gareth unpacks more actionable insights, including his January effect trades and detailed Bitcoin analysis.
So let's go to that Palantir chart right now and just take a look here. What we can see is Palantir is right up into resistance. The stock has had a meteoric gain. If we do a little measurement here, just from this point here, which was November of 2024, the stock has rallied 100%. That's just in November, folks, just from November. So basically 2 months. If we were to go back all the way to the beginning of the year, you're talking about a stock that went from $16 to basically $85. Massive gains. But again, my thinking here is it's into resistance. The chart's telling us it's likely going to pull back in January. But again, it likely waits till January to have any sort of big pullback because again, there's a lot of people that are probably saying, hey, I really want to sell this. I think it's overbought. But at the same time, they're not going to do it until 2025 because of tax reasons. All right. Now on the other side of the coin, I went over just the other day. I think this was late last week or maybe it was early this week. One of my January effect plays was Walgreens Boots Alliance. Well, look at the price action here today, and we can walk over to the big board to tell, I should say yesterday. This was yesterday's price action. So great move here already. Maybe some of the tax loss or most of the tax loss selling is already done at this point on this stock, and it's beginning to catch a little bit of a bid. This was where that was that buyout rumor. Potentially they're getting taken private. We still haven't heard anything about that. But what you notice on a technical basis, so number one, this came down to double bottom, right? That was over here, classic double bottom. That was a great buying signal. Plus this is going back to levels the stock hasn't seen since 1996, I think, or something like that. Pretty remarkable stuff. But then you kind of came up, consolidated, and you had the big hop. But then look, where did you come back to on a technical basis? You came back right into that level. All right. Now, why is that level key? Well, notice it consolidated here and then broke out. What do we talk about? Scene of the crime. Retrace to the scene of the crime. Boom, just like that. But my point being here is that I think this continues in January to move higher in the near term. All right, we'll take a look at another one here. Let's go to BIIB. This was one that I also highlighted just a couple days ago to you guys. Down for the year, profitable, low PE ratio, quality name. It's a biotech. And again, you can see it's already starting to inch up off of 3 major trend lines here. If we zoom out on this, by the way, you have to go back a long way. In fact, look at this trend line down here. It goes all the way back through these lows right there. And in fact, this one right here, that one we haven't hit actually yet, but right here, there's that classic level, that flat top right there on the charts. Pretty cool stuff. My point being again is I don't know where Biogen or Walgreens are by the end of 2025. I'm only looking through January. And just understand that, guys. Again, these aren't calls for the entire year. These are swing trades going into the open. Now, a few new opportunities. I love this chart, guys. Well, Dollar General. Dollar General has struggled. There's no doubt about it. It's been one of the weakest performers for the year. But what I'm seeing here is if you look at this chart right here, we have this high, which was the gap down from earnings. They had some bad earnings, right? From that point, the stock was kind of just meandering. It broke above, it retraced and has held that level. Now, the key for me is taking into account that this has held this line. So right here, it went up, pulled back, it held, and it's consolidated. Take into account that this is absorbing tax loss selling into year end, and then once that's done in 2025, the idea would be, okay, now we start to see that move back to the upside via the January effect. Celsius again down from a May high of about $100 for the year. This is one of the worst performers out there, basically down 70%, but it is starting to make a bottom. And if we zoom out, look at this trend line here, going back to the 2020s. There's October, September of 2020 through these lows here. And again, this would be a very intriguing potential popper once that tax loss selling is over and we hit January. So Celsius is definitely on the radar here. We have Bitcoin just chopping sideways. Now again, looking at this, here's your high pivot right now is around 108. That again was that upsloping parallel. There's a bigger parallel as well that I've shown you. That's how I arrived at that target. Literally a month and a half ago, I said, guys, this is going to 108,000, 107,000. You guys who have been watching me, obviously, you know I've talked about that level. But so far, that's held. We've now come down and we've broken this shorter term parallel. And now look at this. This is kind of interesting. This is catching my eye. Here's your flagpole, right? So here's your flagpole, and is this starting to make a bear flag? And again, it's preliminary, we don't know yet, but it is something that I just started to look at today and say, this, if it stays stuck between these and just continues, you got kind of a megaphone pattern, a bearish megaphone starting to form, and inevitably, if that does continue, and granted it may not continue, but if it does, it would start favoring a break to the downside. The key levels on Bitcoin that we're following, basically you have 100K right here, right? So 100K right here, that's this trend line. If we stay below or at or below that level, then we still hold. If we break above 100K, then honestly, you could go back to 108, and even the bigger trend line is at 112. So you could even go a little bit higher if we break above 100,000. Now on the downside, if the bearish pattern starts to play out and we break this 92,000 down to 91, but 92, it then opens up this kind of range here, which could take us down into this zone. And I have three major trend lines beginning to converge somewhere between 72 and about 65, 64,000. They will kind of get closer and closer, but the idea is, again, really it's about 74,000 because that's that previous all-time high going back to March of this year. So really, as a trader, there's nothing for me to do yet. All I'm doing is I'm watching right here and right here. Where does it break? Does it break up? Does it break down? Watching for that price action.
Gareth's expert analysis sheds light on a market in transition, from S&P volatility to Bitcoin's critical price zones and key January effect trades. Will you seize the opportunity or stay on the sidelines? Share your thoughts in the comments below. And don't forget to like, subscribe, and turn on notifications for more expert interviews. Get ready for more insider strategies to kickstart your 2025 trading journey.